Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news of another day of Chinese currency devaluation. China's currency fell to a 4-year low against the US dollar yesterday. Further cuts are expected as Beijing tries to aid its exporters. There are signs of panic as it's becoming clear the Chinese economy is slowing too fast for the liking of its policymakers. Against the Kiwi dollar, however, the move is very modest, only back to the level it was in June. But Americans are fearing a currency war, suspicious of China's motives and its ability to control their economy. Bets are now rising that the US Fed will hold fire on its interest rate hike in September because of the Chinese uncertainty. And these China currency moves couldn't come at a worse time for many other Asian economies. In the US, the number of job openings fell slightly in June, although the overall level suggests demand for workers remains strong. In Australia, the RBA noted overnight that Australians' obsession with property won't make their nation better off as a whole, and warned that the current sharp run-up in property prices is in effect a wealth transfer from the young to the old, something that they don't welcome either. In New York, the US Treasury 10-year yield benchmark continues to take its cues from the uncertainties in China and is now down further to 2.09%. Our local 10-year swap rate is now at its lowest level in 3 years. On Wall Street, stock market operators have noticed that the short-term moving average for the Dow has now moved below its long-term moving average, something known as a death cross, because it's supposed to signal a new long-term downtrend. Equity markets are nervous. The oil price has stopped falling, however, and is now back up to just under $44 a barrel, and Brent crude is now back at almost $50 a barrel. The IEA has noted that demand for oil is now growing at its fastest pace in 5 years. And the gold price is again much higher in all this uncertainty, now up to $1,123 an ounce. And locally, ratings agency Fitch says that the low dairy prices are a headwind for New Zealand, but do not risk its sovereign credit rating. New Zealand dollar starts today a little higher, having separated itself somewhat from the Chinese devaluations, now at 66.1 US cents, 89.8 Aussie cents and 59.2 Euro cents. The TWI is now at 70.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.